What if I told you that back in early 2025, when silver was lingering around $40 an ounce, I decided to go all in on physical bars, not because I was some Wall Street wizard, but because I saw the cracks in the system that everyone else ignored. Fast forward to December 8th, 2025, and silver's blasting past $58 an ounce, up over 70% this year alone. But this isn't just my lucky break. It's the story of how an everyday guy like me, a software engineer from the Midwest, spotted the signs of a massive silver squeeze and turned a modest savings into something that could change my family's future. You see, while banks were halting sales and vaults were emptying, I was quietly stacking. And there's one wild twist in my journey that nearly cost me everything, but ultimately proved I was right. I'll share that heart-pounding moment later in this video, but first, let me take you back to how it all began for me. It started innocently enough. I was scrolling through financial forums in January 2025, frustrated with my stagnant 401k and the endless crypto hype that never seemed to pan out for regular folks like us. I dabbled in stocks, lost a bit in the 2022 crash, and was looking for something real, something tangible. That's when I stumbled upon reports of silver deficits. The Silver Institute was forecasting another year of shortages, the fifth in a row, with a 95 million ounce gap in 2025. That caught my eye. Silver wasn't just some relic. It powered everything I worked with daily, from solar panels to electric vehicles to the 5G networks I coded for. Industrial demand was projected at 1.12 billion ounces, even with a 4% dip from the previous year. Mine production stuck around 830 million ounces, declining since 2016. Recycling couldn't fill the void, only hitting about 20% efficiency for electronics. I thought, if demand keeps surging and supply lags, prices have to explode. But wait, they weren't yet. Why? That's when I dove deeper into the paper versus physical divide. You know how banks promise you money in your account, but if everyone withdrew at once, it'd be chaos? Silver's market was like that on steroids. On COMEX, there were hundreds of paper contracts for every real ounce. Open interest towered over actual stocks. By December 2025, COMEX warehouses held about 457 million ounces total, but only a fraction was registered for delivery. Shanghai inventories hit a decade low. Backwardation was raging, where spot prices topped futures by cents or even dollars, screaming that people wanted metal now, not promises later. In October 2025, backwardation deepened to 60 cents, a clear sign of physical desperation. I realized the paper game was keeping prices artificially low, but once the physical run started, it'd be game over. Let me paint the picture of my first big move. In February 2025, news broke that 4 major South Korean banks, KB Kookmin, Woori, NH Nonghyup, and Shinhan, halted silver bar sales indefinitely. Soaring demand, supply shortages, they claimed. Koreans facing economic uncertainty shifted from gold to silver, draining inventories fast. Across the Pacific, China bumped precious metals to higher risk categories, restricting citizen buys through banks and requiring physical deposits for futures trading. They were hoarding for state needs in tech and reserves. Export curbs on rare earths and battery tech in October tightened global supplies further, though some were suspended to the US in November amid trade talks. India smashed import records as citizens hedged against currency woes. It felt like a global bank run on silver, and I wasn't going to miss it. Can you imagine the rush? I sold some underperforming stocks, cashed out a small IRA, penalty-free under the rules, and bought my first batch of physical silver, American Eagles and Canadian Maples, from a reputable online dealer. Premiums were already creeping up, about $3 to $5 over spot, but nothing crazy yet. Spot was around $42 then. I stored them in a home safe, nothing fancy, just secure. My wife thought I was nuts, but I showed her the data. The Silver Institute confirmed deficit stacking up to 820 million ounces cumulatively since 2021. Solar alone could drain 85 to 98% of global reserves by 2050, per a University of New South Wales study. Electric vehicles hit 20 million sales, each using extra silver. 5G infrastructure, AI data centers, all amplified demand. Military too, silver and missiles, sonobuoys, submarines. U.S. defense stockpiles were depleted by 2001, and ongoing wars gobbled more. But there's something I haven't mentioned yet, a secondary puzzle that kept me up at night. Why were prices still suppressed despite all this? It was the paper manipulation, a system built on leverage. Like the Hunt brothers in 1980, who amassed 200 million ounces, half physical, half futures, betting on dollar collapse amid 13% inflation after Nixon ditched the gold standard in 1971. Silver rocketed from $6 to $49 in months, a 724% gain. They demanded delivery, emptying vaults. COMEX freaked, changed rules on January 7, 1980, banning new long positions, then hiked margins sky high. Silver Thursday, March 27th. Price plummeted from $21 to $10.8. Hunts lost $1.7 billion, went bankrupt. But here's the key. Physical holders still profited, up 66% from the start. Paper got crushed, real metal endured. I saw parallels everywhere. Palladium in the 2000s, Russia delaying shipments, physical vanishing, prices tripling. Uranium from $10 to $137 a pound in the 2000s as Asian nuclear demand surged. Lithium in the 2010s from $3,000 to $80,000 a ton with EVs. Each followed a pattern. Complacency, inelastic supply, deficit recognition, panic. For silver in 2025, complacency was the cheap prices for decades. Lower inflation adjusted than 1980. Then demand exploded post-2010 with solar EVs. 5G, supply lagged, byproduct mining, low capex. Now, recognition hit with inventories plunging 60% in 4 years on exchanges. Backwardation in October 2025 signaled the shift. Stage 4 panic loomed. A major player announcing shortages, cascading buys, governments hoarding, paper breaking. And this is where everything changed for me. In June 2025, as silver ticked up to $50, I doubled down, buying more bars. My holdings were up 20% already. But then the COMEX outage in November struck. Official reason? Cooling failure. In a military-grade setup, skeptics called it a cover for liquidity panic. Trading halted mid-spike as silver breached 55, reopened to new highs at 54.47. Backwardation deepened. I watched X posts buzzing, Joe Lang on Anaconda squeeze, Tim Hack on China hoarding, 5X in months. Freedom stocks targeting 120. Silver Ape King declaring squeeze on, Raw Tommy calling it devil's metal. Mark 4XX on military squeeze, JMC broadcasting to 400. Hansa Cerny warning battlefield in March 2026. Gold Silver HQ on deficits, Weimar Silver Baron on shortage. Rich Silver on buying explodes, Joe Lang timing with Trump. Tim Hack on China benchmark, macro liquidity on nuclear squeeze, Menthor Q dominating, Gold Silver HQ on 5 years deficits. Solderless 6-5 big squeeze, Weimar backwardation. Taylor Kenny escalates. Lynette Zhang shift. It felt electric. I joined online communities, shared my story. One guy messaged me about his solar firm facing delays from silver shortages. Another, a defense contractor, stockpiling for missiles. It was real. Affecting lives. Forecasts varied. Bank of America 50 to 65, Citi pulling back to 50, TD Securities mid-40s for 2026, but long-term 67 by January. Some wild ones, 100 to 400 if panic hit. I wasn't chasing moonshots. I wanted protection. Hold that thought, because there's another layer I haven't revealed, a personal risk that almost derailed me. But first, let's compare this to past monetary resets. 1971, Nixon closed the gold window as foreign banks demanded physical for dollars, U.S. short. Gold soared from 35 to 850, silver 1.4 to 49. Paper devalued, physical exploded. 2008 to 11, silver from 10 to 50 amid inflation fears. 2025 echoed but bigger, tech demand meeting currency crisis. Fiat average lifespan 27 years. U.S. dollar fiat since 1971, 54 years. Borrowed time. In my journey, I interviewed a mining exec anonymously. He said major copper mines prioritize base metals over silver byproducts for better margins, squeezing supply. Kitco reports showed silver diverging from gold, gaining value as deficits mounted. Physical decoupled from paper, premiums hitting 10%. Skeptics argued demand would ease with slowdowns. But solar set records, EVs unstoppable, 5G expanding. Substitutes? None match silver's efficiency. Copper oxidizes, aluminum poor conductor. Mines take 7 to 10 years, grades falling. Recycling low. Now, expand on my strategy. I allocated 15 to 20% of assets to physical, not all in. Balance caution. Stored in home safe and bank box, controlling access. Focused on liquid forms, coins and bars from mints like eagles, maples. Avoided collectibles for pure content. As prices climbed to 58.66 by December 8th, my stack was up over 100%. Exciting, but nerve-wracking. Wife, now believer, kids, learning about real money. But wait, that wild twist? In September 2025, a dealer delay hit. Premium spiked to $10 over spot. I panicked, thought squeeze starting, almost sold half. But remembered Hunt Brothers' lesson, leverage kills, physical endures. Held on. Days later, deliveries resumed, prices gapped up. That moment tested me, but reinforced owning versus speculating. Tension built through fall. X chatter intensified, warnings of COMEX shockwave. 60% registered silver claimed in 4 December days, 44 million ounces delivered. Not normal, a run. For climax, the big reveal. The twist wasn't just my near sell. It was realizing the squeeze mashed with global reset. Not two brothers, but nations. BRICS building silver-backed systems, China forcing physical backing, US designating silver critical, coalition controlling supply, detonating prices. Industrial crunch meets monetary fear, that's the force. Loop closed. Awe, excitement, anxiety, but payoff. So, takeaway? Verify yourself. Silver Institute, IEA, COMEX. Allocate wisely, own physical. If resonated, subscribe, notifications on. Next, rare earth tie-in. China's controls tripling silver's role. Wealth transfer happening. Be ready.